Going on, it's Rekt Capital and welcome back to the channel. Welcome to today's video about whether or not Bitcoin is in a new bear market, and it's not, and that's what we're going to be talking about in today's video. We're going to be looking at the data science models and the price action on Bitcoin's price action, just to understand where we are in the market cycle and why Bitcoin isn't in a bear market. Subscribe to the channel for more videos like this in the future, and let's dive right in. This is the macro flagging structure that Bitcoin has been occupying for most of this year, really, and this is a chart from August 4th, which I shared in the Rekt Capital newsletter. Generally speaking, when we update this chart, we've since broken out to new all-time highs, rejecting in the 68-69k region. And over the past few weeks, we've seen tremendous sell-side pressure, sell-side momentum accelerating, and of course, sell-side exhaustion is going to be a factor. And what's interesting about that sell-side exhaustion is that this overall downside is now turning the black diagonal into a new support. Previously, that black diagonal was a point of rejection on many occasions throughout the year, but now we're actually finding support here. So this might very well be a successful retest attempt of a previous resistance into a new support. And the other thing to mention here is that this downside wicking price action, panic selling, capitulation, lots of extreme fear in this long downside wick, that downside wick went into a historical area of demand, and we've seen rebounds from here in Bitcoin's price action in the past. Here as well, over here in a downtrend, we broke down below it, but right now we're actually finding support once again. And the thing about this support, this red support area, is that this is a low, a series of lows, and this is actually a higher low. So we're finding support in a historical demand area and finding that support at a higher low compared to the September lows. In any case, Bitcoin is still holding above the red horizontal, and this is also a support which is supporting essentially this overall retest attempt of the black flagging structure. One of the most important things also to mention is that through the lens of the Bitcoin logarithmic growth curve channel, Bitcoin is holding the 0.32 Fibonacci growth curve, which is denoting a higher low over the past few months as well. It's also important for Bitcoin to monthly candle close above this yellow Fibonacci and manage to revisit the 60k region and flip this black Fibonacci, this 0.5 black Fibonacci resistance into a new support. Over the past few months, we've seen this black Fibonacci get breached, so it is possible, and we in fact saw a successful retest. But what we're struggling with at the moment is a follow-through on that retest. And of course, it could be the case that we rebound from here, reclaim 60k by the end of the month, and Bitcoin manages to monthly candle close above 60k. Of course, that would be the most bullish scenario, but at this moment in time, all that's important is that we are in a Fibonacci range, the 0.32 yellow Fibonacci figuring as a support and the 0.5 black Fibonacci figuring as a resistance. This yellow support needs to continue holding, and this black Fibonacci needs to breach and get flipped into support so that we can see the second, more parabolic part of the market cycle take place towards the top of this Bitcoin logarithmic growth curve channel. Because we've recently rebounded from the 50-week EMA, which has saved the bull market on many occasions in the past. Most notably, this May, we saw a fake breakdown from that Fibonacci, or at least in this case, the 50-week EMA. And we haven't seen that for the very first time. We've seen this EMA rescue bull markets even in 2013, where we didn't actually contact this EMA. But nonetheless, this EMA supported the uptrend, and losing this EMA, or at least seeing very small rebounds and then losing it and turning it into a resistance, is where we see confirmations of bear markets. But as long as this 50-week EMA holds as a support, that's what's essentially supporting a bull market. And we've seen that also in 2019, 2020, and of course in May 2021 as well. So just like in May, this being the 50-week EMA and this being the 21-week EMA as well, In May 2021, we saw these two EMAs sandwich price action into a triangular market structure. And you can see that the period of time that I was talking about just a moment ago is right over here, right? Sandwiching by the 21-week EMA, the resistance, and the 50-week EMA, the support. And right over here, we're seeing the same exact thing. The green EMA figuring as a resistance and the blue EMA figuring as a support. The green EMA represents a price point of 52k and the blue EMA represents a price point of 44k. Bitcoin essentially needs to do as it did in May. Break beyond the 21-week EMA, turn it into support, and then enjoy an uptrend, perhaps another retest in the future before rallying to new all-time highs. Bitcoin needs to break beyond 52k, roughly speaking, turn it into support, and then rally to new all-time highs. Whether that happens this week, next week, or the week after that, it's difficult to say. Until it does that, we're going to see consolidation inside this triangular market structure formed by these two EMAs, much like we saw in May 2021. We saw this wedging formed by these two EMAs, and we're seeing a lot of the same price action, at least the same price predicament, take place today as well. So until that green EMA breaches, we'll see consolidation inside these two EMAs, and that could take weeks. However long it needs to take, that's something that we need to see happen before we reverse towards the upside.